To say, first of all, thanks for She Trucking and Sheree Moore for allowing us to be here today. Also, everybody else here for making this event such a success. I am Donna Finney, and this is Tanner Massengill. We're with Commercial Insurance Associates here in Chattanooga, and we're here to talk about insurance. Insurance is one of the leading expenses for trucking companies today. And when it comes to insurance, it can be a little difficult to understand. During my years of working in the family trucking company, I know firsthand how confusing insurance can get. So today, we would like to review some of the most common areas of confusion. Tanner?
To begin, we'd like to discuss why insurance coverage is so expensive. In 2019, the commercial auto segment saw underwriting losses of over $4 billion. For nearly a decade, the commercial auto segment has been an unprofitable segment for insurers. For this reason, we expect to see rates continue to rise to compensate for these losses. Well, one may ask, what's driving losses? One factor is claims frequency. Based on findings from the National Safety Council, the number of large truck fatal crashes has increased by 40% from 2010 to 2019. Another factor is nuclear verdicts. A nuclear verdict is a jury award that is beyond what most would consider rational or reasonable. While there's no defined amount to be deemed a nuclear verdict, most would consider it to be a jury award above $10 million. These nuclear verdicts have been increasing at a staggering rate. Over the last 5 years, there have been nearly 300 nuclear verdicts, compared to just 26 from 2006 to 2011. Not only has the frequency of nuclear verdicts been increasing, but so has the severity. One study found that the average verdict size for a lawsuit over $1 million has increased by 1,000% from 2010 to 2018, rising from 2.3 million to 22.3 million. This has caused a number of large trucking operations to shutter their doors. But these verdicts aren't just affecting large trucking operations. RCX Solutions Incorporated is an example of a mid-sized fleet that was forced to close after a claimant was awarded a $23 million verdict. In lawsuits that went for the plaintiff, the most commonly cited factors were hours of service violations, lack of clean driving history, and driver fatigue. This leads us into our discussion on what insurance companies are looking at when they're quoting your insurance coverage. Behind me, you'll see the 7 most commonly used resources by underwriters. While all of these resources are important, today we're bound by limited time. So we'd like to focus our attention on a specific portion of the CAB report, because this is an area trucking companies can exert control over and see a direct reflection in their insurance premiums. First, what is a CAB report? CAB stands for Central Analysis Bureau, the name of the company that produces reports. You can think of a CAB report as essentially a credit report for a trucking company. These reports include comprehensive, up-to-date information on any motor carrier and their safety, finances, and overall operation. Some of the most important information that's found within these reports is taken directly from the FMCSA, and it includes calculations similar to your CSA score and the same 7 basic categories. Underwriters take violations in these basic categories very seriously. For some insurers, if you have more than 2 alerts, they will not consider quoting your company. For them, it's an automatic decline. While it's certainly debatable whether a cab alert actually deems a trucking company unsafe, it's not debatable that a plaintiff's attorney could attempt to use this against you in court. An attorney could attempt to convince a jury that a cab alert is the federal government certifying that your trucking operation is unsafe. The plaintiff's attorney could attempt to use every violation that your company has received in an attempt to elicit an emotional response from the jury. This is known as reptile theory. Reptile tactics are also a reason that we see so many nuclear verdicts today. Insurance companies take violations so seriously because it makes it difficult to defend your company in court, often resulting in higher payouts even when the verdict doesn't reach nuclear status. Unfortunately, this disproportionately affects small trucking operations more than any other category. Large trucking companies tend to be inspected often enough for good inspections to compensate for poor ones. And they also tend to have the financial resources to more regularly maintain and replace their equipment. For this reason, it's imperative that trucking companies keep a watchful eye on their violations and alerts. Every penny spent preventing violations through properly maintaining equipment, training drivers, and challenging inaccurate violations via the data queue system can reap major benefits on your insurance renewal. Like all commodities, insurance is heavily dictated by supply and demand. By getting preventable violations, you are reducing the number of insurers that are willing to look at your insurance coverage, reducing the supply of insurance that's available to you, and increasing your prices.
Okay. So now let me tell you why it's good to pick a good broker. Any broker can give you a quote, but not any broker is going to be able to understand your industry, is be able to help you manage violations and safety. They're also going to be able to help establish practices and procedures that will help prevent the violations in the first place. A good broker is going to know the type of coverage that you need. For example, what's the difference between trailer interchange and non-owned, and what's the best situation for you? They're going to have a dedicated team that understands the industry as well. At Commercial Insurance Associates, we have producers and teams that are specialized in the trucking industry. Not to mention, we are one of the top 100 agencies in the United States as ranked by the Insurance Journal. And just recently, we were featured as the Agency of the Month in the magazine Rough Notes. So today, I know that we're kind of limited on time and we don't want to take up that much. So we have probably just enough for one or two questions if somebody wants to ask any. Otherwise, if you would like to come to our booth, we're at booth 44 and we'll be more than happy to discuss insurance with you at that time.